The Mercantile Exchange is calling on its members to educate the public and the lawmakers to head off what it calls an irrational, damaging reaction. But analysts say the crash of '87 will have a permanent structural effect on these markets. In Chicago, Scott Gervey for the Nightly Business Report.
The nation's banking industry has had its financial troubles lately, but top banking regulators told Congress today that the stock market's crash hasn't added to them. Washington correspondent Bob Friedman reports.
Bank regulators said today that last week's stock market crash did not shake the nation's banking system, and they urged a House panel to press ahead with banking deregulation. The stock market crash of 1929 took the banks down with it as Wall Street and banking were intertwined. In the aftermath of the crash, banking was separated from the securities industry. But under the proposed bank deregulation being pushed by the administration, a bank holding company could own both a bank and a securities affiliate as separate entities. Banking would be regulated by the FDIC, the FSLIC, and the Treasury Department, while the securities affiliates would be regulated by the SEC. It's a setup regulators say would have protected banks last week.
If there is going to be a restructuring, that it be accomplished in such a way that there is a separation between the bank and the securities activity to protect against just such volatility.
Senate Banking Committee Chairman William Proxmire still supports the affiliate concept as long as a bank is not the parent company.
But this is exactly why I say the bank should not own the securities affiliate. Because if the securities affiliate fails and the bank owns it, the bank may be in some trouble.
Following last week's selling spree on Wall Street, people have been putting their money in the bank, said the FDIC today, and they added the decline in interest rates has helped the industry's bottom line. But FDIC Chairman William Siebman warned if the market fall hurts consumer confidence, it could raise the number of failed and troubled banks.
Obviously, if the marketplace affects the real economy and we have a real recession, then that number will have to be re-examined.
Congress is racing against a self-imposed March 1st, 1988 moratorium on new banking powers. Lawmakers writing the banking bill are still anxious over last week's stock market crash, and that mood may affect post-moratorium banking legislation. In Washington, Bob Friedman for the Nightly Business Report.
And in a victory for banking interests, the House today defeated an amendment that would have placed a cap on credit card interest rates.
A new study by the Conference Board suggests that the sell-off that has shaken Wall Street has caused only mild aftershocks among American consumers. The special survey conducted late last week found 73% of the households questioned did not believe the stock market slide will lead to a recession, and most of the remainder expected only a mild downturn. The Conference Board says that continued high level of confidence bodes well for a reasonably Merry Christmas for the nation's retailers.
Somewhat less optimistic is Commerce Undersecretary Robert Ortner, who told a housing conference in Washington today that he wouldn't be counting on strength in consumer spending to carry the economy from here on. However, Ortner believes an improving trade picture will offset the impact of a drop in consumer spending and that the economy will achieve the 3.2% annual growth rate forecast by the Reagan administration.
Well, the markets seem to ignore even that kind of a rosy, upbeat prediction for the economy. But still, it did take some gains, and it got those gains ever so fractionally. Let's take a look at them again, up a third of a point, with advancing issues being beaten by about a 2-to-1 issue by declines. One new high today, 371 new lows. Leading the way in the New York Stock Exchange, DPL Inc. down 5/8 with some 6.2 million shares traded. The stock is going ex-dividend tomorrow at $2.08 a share. AT&T up 1 1/8. Philadelphia Electric down 1/2. General Electric up 1/8. Now today, General Electric Credit Corporation, a subsidiary of GE, proposed a shelf offering of $2.5 billion of debt securities. IBM unchanged. And American Express down 1, Storage Technology down 1/8, Chase Manhattan down 1 1/8. It is considering the sale of its Dutch subsidiary. Dow Chemical up 1 5/8, Exxon down 2 1/4, part of a shaky oil group today. Among the widely held, ASA Limited up 2 1/4, and Allegiance up 1 1/4. Analysts see higher value in the stock, and as a result, it has been climbing of late. Chrysler down 1 5/8. News of those layoffs hurting the stock today. Compaq Computer up 3 1/2, tripling in third quarter earnings really helped the stock rebound today. And there is strong demand for Compaq Computer products, and all the more unusual when you consider the fact that Compaq decided not to follow IBM's System 2 lead, and in fact was one of the few computer makers to make that move. Digital Equipment up 8 3/4, still rebounding. Johnson & Johnson up 2 5/8, recommended by many portfolio managers. Norfolk Southern down 1 5/8. It had a third quarter loss on $620 million charge for restructuring and workforce cuts. And Raychem up 7 1/2. It posted a 39% higher first quarter earnings and has set a 300,000 share buyback. New York movers included Constar International up 2 5/8. No news to account for that activity. Bundy Corporation up 3 1/4, rebounding after yesterday's loss on news that TI Group dropped a $40 tender offer. The company is set for a $2.5 million share buyback. Other movers included Maritrans Partners up 1. The board is set to declare a dividend, and also the company seems to think that it's a good value right now. Not surprising coming from the company. Newmont Gold up 4 1/8, posted 69% higher third-quarter earnings on higher gold prices. Other movers, L.E. Myers Company down 1 1/2. The company saw no news to account for the activity. General Cinema down 8 3/4. Again, no news to account for that activity. Over on the American Exchange, down a little bit more than 4 1/2 points, with volume running close to what it was yesterday. 239 issues up against 558 that were down. The most active of the American actors, Wang Class B, down 3/8 with some 909,000 shares traded. Echo Bay up 1 5/8. Gulf Canada Resources down 3/4. Texas Air down 1/8. Still persistent problems over just how reliable the airline's time performance has been of late. Ondel up 1/8. Other American movers, Gull Inc. up 5 5/8. Now, Parker Hannifin is to acquire the company. 0.7 Parker shares for every 1 Gulf share. Ultra Systems down 2. Difficulty at the American Stock Exchange, the company says. No difficulty with the stock. The company is due to make a press statement later today or tomorrow. Looking at NASDAQ, down almost 4 1/2 points. Volume today running about 5 million shares less than yesterday. 814 issues up against more than 2,300 that were down. And the NASDAQ 100 index up almost 2.7 points. The most active of the NASDAQ, Apple Computer up 3 1/4, Intel up 3, Microsoft unchanged, Genentech down 3/4, and Henley Group up 1. Now, it boosted its holding in Santa Fe to 14%, and that has a lot of people wondering if it can go up still further. Chi-Chi's down 1/8, Telecom also down 1/8, Lynn Broadcasting up 5/8, Sun Microsystems up 3/4, and Seagate Technologies down 1. The big movers on NASDAQ included Dickie John up 4 1/2. Now, they're studying a $20.50 share cash bid from management. Entertainment Publications down 3 1/2. Management Group has deferred a $26 cash buyout bid. And Home Intensive Care down 1 3/8. Now, Medicare moved today to withhold reimbursements. They're investigating what appear to be some questionable claims at the company. Well, what do you do if your broker goes broke? It's a question a lot of people are asking these days. So today I spoke with Ted Pope of the Securities Investor Protection Corporation, the insurance agency of sorts for brokerage houses. I asked him just how financially sound brokers are these days.
Based on our experience to date, we have just entered our third brokerage firm for this year. That compares rather favorably to our recent experience, where we have seen 8, 9, 10 firms a year that we've had to become involved with.
Now, you know, today there's a situation with Haas Securities, a New York Stock Exchange member firm. They were forced to shut down. A lot of people wondering whether this is the continuation of a bloodletting here. What do you think?
Neil, there are many times when a brokerage firm will shut its doors under circumstances that does not present a risk to its customers. For example, in the case of Haas Securities, my information is that that firm introduced all of its accounts on a fully disclosed basis to another firm, so the customer's accounts are over at the other firm, and they should not be tied up in the Haas closure.
Well, let me ask you this. Are you in good enough financial shape? Is there enough money in the insurance fund to cover this loss and what other losses arise?
At the present time, we have close to $390 million in the SIPC fund. That should be related to a statutory requirement that we maintain a fund of $150 million. In addition to that, we have a confirmed line of credit with a consortium of banks throughout the country to the extent of $500 million. In addition to that, we have a statutory right to borrow up to $1 billion from the United States Treasury if we need it.
So you are saying right now that you are ready in the event of other potential losses down the road. You're in good shape.
Absolutely. With readily available assets of almost $9 billion, we feel comfortable.
All right, Ted, thank you very much. Ted Pope, President and General Counsel of the